Hi everybody, it is Jared Johnson here with Day Traders FX. Lovely to be with you today. This is our Ask Jared Johnson, some trader stuff today. So normally we do a Facebook Live every day. I'm having a little bit of internet problems, so I had to do a recorded video, and then we'll have a live one tomorrow. But I'm having some sort of problem, so sorry about not being able to do a live video today, but we're still going to be able to cover some great stuff, and I'm looking forward to it. So let's spend a couple of minutes um, talking about a couple of details. Now, I like to introduce people to trading, and at the same time, I like to talk to traders. And I like to kind of just mix it back and forth. So some days we're going to have topics that are going to be a little more general, and some days we're going to have topics that are going to be a little more specific to people that, for example, know how to trade. Now, if you know how to trade, then you will know that basically you have three parts to your job, right? Number one, we've got to try to figure out which direction the market's going. But that's really only one of the three things you would think, well, duh, if it's going up, trade it up. But markets don't always just go straight up, even though they're going up. That sounds weird, but it's true. And then the next thing is, if you are looking for good entries and good exits, right? If you can do those three things together, then you're in good shape. If you can't, that's where we have some problems. So that's where we have to kind of focus on these three things, right? Direction, entries, exits. And they're definitely not just try to do a really good job with one or two and hope the others go well. We've got to really nail down those three things really well. And so I want to talk a little bit about entries and exits and direction today. So I'm not going to make it too long, but I do want to spend a couple of minutes discussing how we can kind of better improve that. Now, I want to show you a couple of things here for just a moment that are my watch list for the week, right? I've got this watch list. I have a trade group. I share with my trade group all my trade ideas and all the trades I take and so on. And so in this watch list, I give everybody some ideas of direction they should be trading the market, where they should be taking entries, where they should be taking exits. And I want to show just a couple of examples of that really super quick. So let's get back to this guy right here. We can see this little area here. You can see dates, right? You see these dates here, December 10th. This was all posted on December 10th, so a couple of days ago. Let's look, for example, at the Aussie CAD. Here is a good little trade. Look at this thing. It's run up, right? Now, you could say, well, you definitely drew in some stuff right there. Yeah, oh, it hit our target. What do you know? How lucky. Oh, we hit our next target. How lucky. But it ran up. Now, if you look at my chart that I posted here on December 10th, which again, today is December 12th. So let's look at this chart here from December 10th. This is what I was looking for. Let's get that, however long this consolidates, and get that run into short-term target number one, short-term target number two. So again, to kind of compare those notes side by side, what I was looking for and what happened. Now, how many pips were made in that move? Let's have a little quick peek here. It broke out right about here and ran up to about that, well, it ran up to that high. So we'll say 75 pips. Now, how much is 75 pips? Depends on what size your trading account is. It could be $75, it could be $750, it could be $75 million. It could be any amount. So just depends on what size your trading account is. But this was a nice 75 pip run. Now, how do we trade this stuff a little bit better? Where was the best, most crystal clear entry on something like this, right? I post these notes and I say, okay, if this just breaks our trend line, let's just buy the trend line breakout. And that's clearly a good place to get in. Here's that exact same trend line you can see right here. Kind of peaked up a little bit, pulled back a little bit, and then got back above. That's a good little entry. Well, what if you suffer from what so many of us suffer from, which is bad schedules, right? Some of these movements will happen in the middle of the night if you're in the US, or if you're in the UK, it might happen in the middle of the night, or if you're in Asia, it might happen in the middle of the night. So sometimes these movements can be a little bit difficult to get into, and you can say, well, I'll set a pending order, and then I'll just get in. You know, it's just on my little limit order right there. If it breaks that high, it puts me in, everything's fine. So I am reading this really interesting book, and I'm going to post the notes and the details on it below this video and the link to the book. But it's all about performance, and it's all about all these different kinds of things and how to put together information. It's just a really good book. It's written by the guy that wrote The Power of Habit. So really, really cool stuff. One of the things he talks about is there's an interview of one of the most famous poker players, female poker players, by the way. Don't mind the background. I'm in the RV again. Some people might think, who is this guy? Is trading really working out so well that you are homeless and you live in a motorhome? I drive my motorhome to the beach sometimes. I have a home office. I have a mobile office, as I call it. I showed you guys this a couple of times ago. But anyways, I work from my RV down parked at the beach. So that's why you see this interesting background here. Anyways, in this book, he talks about one of the world's most famous female poker players, and she was kind of this math whiz and this psychology whiz and all this stuff, and it just really stressed her out. So she went into poker, which seems like it'd be something a little more stressful, but what do I know? Anyway, so in poker, she says, what you're doing when you're placing a bet is you're asking the other player a question, right? We're asking them a question. I'm going to bet that you think my hand is better than yours, for example. And if they raise their bet right back at you, then they're saying, well, no, I don't think your hand is better than mine. And you're getting an answer to your question. And you have to make a decision every time, right? Am I, okay, with that information that I have now, do I think they're bluffing? Do I think that, in fact, they do probably have a very high likelihood of winning because of their hand, and so on? And so trading is very much the same thing. We get stuck in this mode. I talk to so many traders every single day, and people think, you've got to win all the time. You've got to Warren Buffett the market, right? Where you buy the perfect thing, and it goes and does exactly what you want it to do, and then everything's fine, and we're the smartest people in the world. Well, maybe if you're a long-term investor, well, that's still not realistic for a long-term investor, but you can imagine if it were. But for day traders, that's especially not realistic. We have to be okay with being wrong. You got to be okay with being wrong. There is a major psychological situation with everybody, right? Where it's very difficult to admit we're wrong. And in trading, that doesn't work. That doesn't work. You've got to be able to admit you're wrong, and you've got to be able to admit you're wrong quick. It's like the old Silicon Valley saying says, fail often, fail fast, fail something else, fail smart, something like that. And that's true. We've really got to do that. So this is a great example of, did we have a clear entry? Yeah, we had some good entries right here, right at this breakout. That was a great little spot to be getting into the Aussie CAD long. But if you missed that entry, if you weren't around, if whatever happened, we're going to be asking the market questions. We're going to be putting some trades out there, and hoping that we're going to start to get things running our right direction. Now, I don't just say put a trade on and hope it goes the way you want it to go, but we can ask the market questions, right? We can ask the market which way it is planning on going in the form of a very small trade, right? Now, we do this by saying, okay, I'm willing to risk, a fourth of my normal trade size or a tenth of my normal trade size to get an entry so that I can pay more close attention to this. Now, if you take this example into real-life situations, who has bought a car recently? Now, I'm having kids, not me, but my wife. We're having kids just all the time, and we're always having to buy a bigger car every time we have another kid. Well, recently we just bought a minivan. I know, save your judgment. But we bought a minivan, which, by the way, if there's any minivan haters out there, which was me, minivans are awesome. They're so great when you have kids. I don't care what anybody says. Yeah, dads don't look cool in minivans, but I'm a dad. I don't think I can look cool anymore. So as long as I'm hanging in there, I think that's good. Anyway, so I buy this minivan, right, a couple weeks ago. And this happens every time I buy a new car. All of a sudden, all I see is that exact same kind of car. And even the same color, just everywhere, right? I see it everywhere. And I have never noticed that car before. Now, it doesn't mean that that car wasn't there. It just means that I never noticed it because I had no interest in that situation. And now that I've got that minivan, I notice that minivan everywhere. Trading's the same way. Sometimes we need to put a small trade on to get focused on a setup. Now, we're not just going to put random trades on in random directions, but what we are going to do is find high probability directions, high probability trends, high probability targets, and there's a lot to say about all of that. And then from there, we're going to start kind of scaling ourselves into these trades. Now, there's a lot of analysis to talk about on this Aussie CAD, for example, but there was really, really good reasons to believe it would hit this short-term target and this slightly longer-term target, and it did. And this was kind of our entry area here. So ask the market a question, put a trade on, maybe before there's enough confirmation, be willing to risk a couple of bucks. If this really goes the wrong direction, you can say, well, I'm in so small and I still believe in this upper area, I'm going to give it a shot. Or you can have a really, really tight stop on something like that and say, it's not working for me and I'm out and I'm down 10 bucks, whatever, right? But just a really, really small trade so that you're paying closer attention to this setup. Now, this one worked out very well, gave us a nice little entry and a pretty nice run. And what I'm trying to emphasize here is that sometimes we really know where the market's going to go, because these two things right here are high probability targets. Whenever they're pretty close, the market usually hits them. And I'll talk more about what these are in my upcoming Ignition course, which is going to be really great for new traders and seasoned traders. It's going to be really, really good stuff. But in this right here, this is telling us, first of all, these targets want to get hit regardless. So our goal is going to be to find a reason to get in and trade that direction. In this case, we had a trendline break, but we can still scale into this stuff. We can take these trades and start looking for reasons to target this upper direction right here. Another little example of that is here is another setup that I was looking at. So Euro Aussie. There was definitely a little bit of an Aussie focus on my brain over the last little bit. Euro Aussie, target. These are the areas I'm looking for. I posted this on December 10th. You can see that ran up and did a nice little job there. And then what happened in real time? Let's have a little peek. Let's go to the Euro Aussie here. Here is that Euro Aussie. So side-by-side charts, little run up right there, looking for that break, looking to target these areas. What did it do? Ran up, broke, and is running. Still hasn't really hit target one. Now, this isn't a super high probability target, honestly. This is just some previous lows, but these guys are. These are really high probability targets. I really like these little levels down here, and so on. I like all these levels. These are really great spots to be looking for on the Euro Aussie. And guess what? It's going to get there. So what's my job? To look for opportunities to trade down to that area, to look for reasons to get in to trade that direction. And what do I have to do? I got to start asking the market some questions. I got to find some good entry areas and start testing the waters, putting a little trade on, and that way it focuses me and it dials me into the trade. We have a whole list of these kinds of trades, right? This is my weekly watch list. It's pretty sprawling this week, but it did a really, really good job at so far it's only Tuesday, and so there's still more to go on some of these, but we've seen some really nice movements. We've seen some really nice runs and some things starting to happen. And so, again, we're just in that situation of asking the market a question. Look at the Aussie dollar. You can see, again, a big Aussie focus here. Aussie dollar. Decision point. This is a really good example. On the Euro Aussie trade, we were looking for, a breakout. We were looking to get into this thing and trade it down on the Aussie CAD, same kind of situation. But if we go and we look at this chart right here, and we say, okay, this is the Aussie dollar, US dollar, and this is a major decision point. It was sitting at 75.12, and I was saying 7,500 is our decision point. This is going to break or it's going to bounce. And which one is it going to do? Well, you can see which one it did. And of course, it's easy to say, well, no kidding, it's going to go one direction or the other. But these are very important levels that we need to be watching for. And look what it did. There was our 75.12. Here's the Aussie. It ran all the way up to about 75.80. So it ran up 80 pips. Again, there's some good money to be made on something like that. But what can we do with something like this? We can do this kind of stuff right here. We can say, okay, I'm gonna test the waters. I'm gonna test the Aussie because there are good reasons to believe that these targets that we can see here, are going to get hit. And in fact, we have a really good target. I'll just give this little one away. We have a really, really good target at 77.70 that I'm watching very, very closely. I think that's super important, really important level. But on the short term, we can say, all right, I am willing to test the waters. I'm willing to ask the market a question and say, okay, I'm going to put a couple of bucks on the line here. Is this going to run towards these high probability targets. We have a really close area that if this starts to break below, we can ask ourselves, we can cut our losses off, again, risking just a few dollars. But if we have reason to believe that this is going to trade up, which we do, we don't just randomly pick directions again. We don't say, well, this looks like it could go, so I'm going to go. You've got to have high probability targets. You've got to have a good setup that tells us, yes, this is a good place for this this direction to start happening. Guess what? A daily chart, it's a pretty good setup. Look at this trend line right here. This thing has been tested multiple times, and what's it going to do after a big run down? Likely hit and bounce, and it did. So we ask the market a question down here, and we say, are you going to go up? I'm going to put a little trade on. I'm going to risk 10 or 15 bucks, say. It goes up. We start adding to this position as it starts to run towards targets. Weekly pivot, great little target, running up into some of these areas. But we've still got some big guy targets up there, another 150, 200 pips actually. But it's that kind of stuff that I want you to start looking at and thinking about. You need to have a few elements in play. Number one, we need to have some high probability, there we go, targets. Number two, we need to have a reasonable setup pointing in a direction. Number three, a small, as I call this, test the water trade size that gets us kind of started on this trade, right? But we need to have, there we go, a couple of things to think about there. We need to have good targets. We need to have a reasonable setup that's saying, yes, there's a very high likelihood that the market's going to go this direction. And then we just start testing the water with that small trade size. We start asking the market a question. I don't want you to get too caught up with, I lost 30 pips, I lost 50 pips, I gained 30 pips, I gained 50 pips. Get caught up with, is my account growing? Am I making money or not? So you might have to test the water with a 30 pip trade and lose 30 pips, but that 30 pips might have a really small trade size and only cost you 10 bucks, whereas your other larger position is going to make you hundreds of dollars or thousands of dollars when the trade works out. So don't get caught up on pips. Get caught up on, is your account growing, pacing yourself, scaling into trades. Pretty much one more thing to kind of say about that is let's just add this. There's pretty much no reason to go in full size on a trade. It does happen from time to time, but we're basically always going to scale into trades. And that means break up normal trade size into multiple parts. So, if you're trading $10 a pip, if you're trading a standard lot, right? If you're trading $20 a pip, $30, $50 a pip, whatever. Let's say you're trading $10 a pip, a standard lot. You should break that trade size up into 2 or 3 parts. You want to get that $10 a pip. You want to make that $400, $500, $600 on a trade, $1,000 on a trade, whatever. You need to break that trade size up because all the risk in any kind of trading is on the entry and the exit. So if we can start that entry a little bit smaller and start to hone in our focus on the market, right? And then from there we can add to our positions. Sometimes I'll put a trade on and I'll just say, wow, this is a horrible idea. This is a horrible trade. What am I thinking? This is the worst thing ever. And so when we do that, it is very good to be able to just say, I don't want to be in this trade, or I'm going to give this trade a very little bit of room to work out, and if it doesn't, I'm out of it. But it's so much better to start that off with a fourth of your normal trade size and say, darn it, I took this trade and I just realized I hated it, I didn't want to be in it, I'm out 20 bucks. Instead of saying, I'm out 200 bucks because I entered and exited really, really quickly because I didn't like the trade. So you should always break that trade size up. So, scaling in is super important, and I'm going to say something controversial as well, and we're going to talk about this in future sessions, but I want to see your comments. I want to see what you guys think about this. I will add to a trade in drawdown as well as add to a trade in profit. Some people only do one, some people only do the other, some people don't do any of those. Scale into your trades, add to them in drawdown, add to them in profit. I'm only going off 15 years or so of experience and seeing this work very well over and over and over again. So this is the kind of stuff that we want to do, kind of stuff we want to see happen. I hope this is helpful. Remember, ask the market a question, have high probability targets to aim for, a reasonable setup that tells you that your entry area is a good area. Scale into trades. Scale into trades. These things are going to be game changers for you. Game changers. So I want to make sure you're doing that. I hope that's helpful. I really appreciate you watching. Thanks for watching. Thanks for being on with us today. Again, sorry for the lack of live video, but my internet's all ski-wampus. So I will have a live video for us tomorrow, but this is going to hopefully cut it for now. So thanks for watching, everybody. Always good to have you chime in, and please leave your comments below, and I promise to answer anything I can, and we'll see where it goes. Thanks, guys. Take care.